You're listening to the MoneyWeb Now podcast series with Simon Brown. Live streamed every weekday at 6:30 a.m.
It's Wednesday, 10th of March. I'm Simon Brown, coming at you live and loud from the MoneyWeb Global Headquarters in Johannesburg, South Africa. On the show today, Viv Govender, market shrugged off those local GDP numbers, down 7%. But how do we get back? Do we get back? I mean, the past is the past. The future worries me. Adapt IT CEO Sabu Shabalala, not bad results. Annuity income grows, nice cash power. They're going to perhaps go shopping. And then Afrocentric results, certainly diversity helping, but also in a pandemic, your medical aid companies, that's one thing you don't cancel, but maybe you shop down. Yesterday's poll, we were asking you about that GDP data. We had Mopo Malapani on, economist at RMB. She said they were looking for about 7% down. She was spot on, and kudos to her. We asked you, what did you expect? 29% of you said, yep, around 7%. 45% of you thought worse than 7%. And 26% thought better than 7%. I'm going to chat with Viv around that. As I said, -7's a horror number. It's a pandemic. Okay, what's the plan going forward? MoneyWeb Now, brought to you by Orbvest, a global real estate company that has a hyper-focus on acquiring stable, income-producing medical buildings in the USA. Investors use Orbvest's online platform to invest directly into low-risk commercial real estate, primarily in the healthcare niche in the USA, from as little as $5,000. Some morning headlines, MoneyWeb, no capital and regional dividend for Growthpoint in 2020. The UK Property Fund basically holding on to cash. Growthpoint had bought that stake in 2019. They got it at a good price. They certainly did, but they're not getting any cash flow from it yet. And Business Day, S&P lukewarm on SA's debt targets. Sovereign rating risks certainly remain balanced, say the agency. No reason to expect a growth rebound of significant proportions. US markets overnight, massive day in the US. S&P up 1.4, Nasdaq up 3.7%. Asia mixed, Sydney off 0.3, Turkey are up 0.1. Commodities red, exception gold 1709. Rand a little better, 1533. Top 40, a flat opening, looking to open around 20 points higher.
MoneyWeb Now, on the money. Also available on podcast.
Chatting now with Viv Govender, portfolio manager at Rand Swiss. Viv, morning, appreciate your time. The -7% GDP yesterday, certainly better than many expected during the course of the year. Still a horror number, taking us back to about 2014. As I mentioned in my intro, the trick now is, truthfully, how quick can we get back to December 2019 levels? And if I look at GDP projections from Minister Mbowene's budget of 2 weeks ago, the short answer is not quickly.
Oh, yes, most certainly. I mean, we're going to take about, 2025, 2026, if the minister's expectations are correct. And that is something I think that we have to take with a grain of salt. We all know that historically South Africa has been pretty, or at least the official sources like the Reserve Bank and the Finance Ministry have been quite optimistic about their projections for a GDP growth in the country, and usually they're off by a factor of 50% or so, which is quite a huge factor. I can't imagine how bad it would be if we were off by 50% on those growth projections, given the 7% drop in GDP we saw.
Yeah, and then, yesterday at the same time, the OECD was actually upgrading 2021 global growth expectations. They've looked for the global economy to go from 4.2% growth in 2021 to 5.6. If we park South Africa aside and look sort of at the developed and rest of the world, the rest of the world is actually going to rebound fairly quickly, probably by maybe the end of 2022, and that's good, certainly for our global companies on the JSE and for offshore investors.
Oh, yes. I looked at every single sector, or most comparable countries or regions. India, China, massive recoveries this year, virtually wiping out, if not in the case of China, overcoming what we had last year. So they're already ahead at the end of 2021, where they were before the coronavirus became an issue in China. India, quite similar. We're talking double-digit growth rates for India almost for the next couple of years. China grows just below double digits this year, and then about 5-6% next year. The EU, growth rates match ours this year, in fact, slightly better. But next year is where it really becomes interesting, because they grow, almost the same rate this year as next year. We in South Africa expect a significant slowdown in terms of, the growth rate from, 2021 to 2022. The US, massive growth rates this year, slowing down a bit, but we're talking 6-point-something% and 4-point-something% for 2021, 2022. Comparably, we in South Africa expecting about 3% this year and just under 2% next year. It's shocking just how much worse our growth rate expectations are versus everywhere. And even Sub-Saharan Africa growing at a similar level to us this year, but next year, doing much, much better than we do.
And does that mean, as an investor, and I know in the last couple of years, with NASDAQ and S&P doing very well, a lot of people have looked offshore for investing. That market has run, though. As an investor, do we still look local for perhaps some of those well-priced gems? Or is this a case of, the economy is not the market, but still let's focus on those growing economies where at least you've got wind at your back?
Unfortunately, it's still overseas looks best at the moment. Even if you're concerned about places running, why not go to the European Union as opposed to going to the US, where the Euro Stoxx 50, for instance, hasn't done that much better than it was a few decades almost ago. So there is a possibility there's still growth out in the developed world if you are concerned about the US. If you are concerned about the US, not every sector has run. For instance, you look at the tech sector; it's probably the driver for, much of the overheating or overinflation of asset prices in the US. In which case, you can just combine the S&P Value Index, which really downgrades the tech sector, bases its components on a more fundamental valuation, giving you effectively exposure to the US while significantly cutting down exposure to growth sectors, basically places where the price doesn't quite match the PE ratio.
Yeah, that Euro Stoxx 50, I just had a look at the chart, up only 20% in the last 5 years. Maybe there is something there. We'll leave that there. Viv Govender, Portfolio Manager, Rand Swiss. Appreciate the early morning.
You've worked hard to accumulate wealth. But with these uncertain times, how can you preserve and grow your wealth in a safer place? Offshore, while earning regular quarterly dividends in US dollars. The solution is here. Hundreds of investors from across South Africa are investing in specialized medical real estate in the USA, sourced by a highly skilled team who make it easy for you. Orbvest SA, an authorized FSP. Visit orbvest.com.
MoneyWeb now on the money.
Chatting now with Sabu Shabalala. He is Adapt IT CEO. Results out 6 months in December. Revenue down 2%. Normalized headline earnings up 16%. Sabu, appreciate your early morning. A solid set of numbers, particularly considering pandemic and the like. Delving into them, annuity income, which is a big part of your business, suggests to me, were you picking up clients during this 6-month period, or were you able, the annuity income looks better? Was it new clients? Was it invoicing existing clients at better levels?
Thank you for the opportunity. For us, annuity revenue was the underpin of our business, and it's in particular the clients that we had picked up pre-COVID assisted us maintain the levels of revenues that we're seeing this year that we're reporting. So all of this happened during lockdown, and we found our business to be quite stable. And it's driven in the main by our existing customers that have bought systems from us, that are paying maintenance and are buying new solutions from us. Yeah.
How much of your revenue these days is annuity driven versus non-annuity?
66% is annuity, and it's a function of a software business. I mean, we license our software to all the clients that wish to use it. Again, what has helped is over the years we've grown our revenues, in foreign geographies, and therefore we earn in hard currency. So 27% of our revenues come from outside of SA.
Okay,
So
fully,
that certainly assisted.
yeah, fully a quarter out. A number of your divisions struggled, as we said, pandemic, hospitality, manufacturing, energy, tough for those sectors. Are you starting to see recovery, sort of a comeback to varying degrees? I mean, hospitality, yes, a bit, manufacturing, maybe energy. Are you seeing recoveries there yet?
Certainly. I mean, we were quite encouraged by the GDP numbers that came through in South Africa, 6.3% in the last quarter. We're seeing similar trends where our clients are starting to revert back to normalcy. However, the recovery, slow as it is, we in the main are looking for clients to resume the project environment, because that's what suffered the most.
And those were, I mean, were you seeing project delays, or were there actually cancellations coming through?
No, it's actually delays.
Okay.
Our pipeline, we have quite a robust pipeline of projects to implement new systems for our clients, which were simply deferred to times where clients can actually pay more attention to our business.
Communications, your largest revenue and EBITDA segment. What is your offering in that communication space? I mean, is it just as simple as voice, or more than that?
Oh no, we support telco companies. So we support telco companies with their customer experience, as well as their USSD services. So when telcos service their clients, we assist them to have a better understanding of their clients and do the analytics in that regard. So the better the telcos are performing, the better our business will.
Got you on that. And I think we all used more telcos last year. A last question. Your net gearing down quite markedly, cash generation up, sitting on a fair bit of cash there. There's the offer from Huge out there for Adapt IT, and we can park that aside. I think that's perhaps a bit opportunistic. Are you perhaps planning some acquisitions and looking out there? I mean, imagine maybe some businesses under pressure, you've got some cash. Is there opportunity for Adapt IT?
Certainly, I guess we can't comment much on the huge offer, but to the extent that our cash generation is up 93%, and we had 140 million reduction in debt. That's over a third of our debt, with the view of re-energizing our balance sheet in order for us to be ready to execute. We believe that there are some good targets which we're already starting to talk to, with the view of starting our acquisition strategy in the next financial year.
We'll leave it there. That's Sbu Shabalala, CEO of Adapt IT. Appreciate the time. This share was 17 Rand back in 2016, now trading at 475. 17 Rand, I think that was probably a little over expensive, but I got to say, 475 looks cheap in that space.
MoneyWeb now on the money. Also available on podcast.
Chatting now with Afrocentric CEO Ahmed Bendakar. Results came out also yesterday, 6 months ending December. Revenue up 25.3%, HEPS up 10.9%, dividend of 17 cents declared. They, of course, own MedScheme, which is one of South Africa's largest medical aid administrators. And I think, certainly as administrator of a fund I'm a member of, I think we're unaware of they sitting in the background. Ahmed, really appreciate your time this morning. Fair to say that as a rule, one doesn't get rid of medical aid. It's an important part of a family budget. During a pandemic, probably even more so. But did you see perhaps some of your customers sort of shopping down in the schemes that you administer, sort of maybe moving to cheaper offerings?
Good morning, Simon. Thanks for your time this morning. Yeah, it's a good question. On medical aid membership. And while we did expect that because of the unemployment that was expected, or loss of jobs in the second half of last year, we did expect a consequential impact in membership. Surprisingly, however, I think what was clear is that people did what they could have done to actually hold on to the membership. So much less resignations than we anticipated. Surprisingly, we had a 1% growth in new business of membership. and much less buy downs compared to the previous year.
Yeah, I suppose so. It's a pandemic. It focuses your mind and your health perhaps like never before. How many individuals are now covered by your scheme? How many are you administrating?
So it's now 3.9 million, and that's cumulatively with administration as well as the managed care services as well.
Does that make you the largest in the country?
On managed care services, it makes us the largest, which is specialized health risk management services. On the administration, it would be second largest.
Okay. One of the things that I note, I mean, we've been talking around the administrating and the sort of Medi scheme, but you've actually been sort of expanding the business, moving into, for example, you've got your virtual care, the telehealth, you've got the pharma business as well. Those have been growing, often at perhaps slightly better margins in a sense. Is that a continued strategy you're going to continue with, sort of that integration of other parts of the healthcare industry into Afrocentric?
Simon, you're 100% correct there. So MedScheme itself is in fact 50 years old, and up until about 5 years ago, the group was dominated by MedScheme. But that's when we undertook a strategy of diversifying the business, which included pharmaceuticals as an example. Pharmaceuticals now make up about 40% of our profits in the group, and continuing to grow, in fact, as well. But for us, what's quite reassuring and exciting to see is that the work that we've set out to achieve is also yielding the results within MedScheme's growth. So even though it's been 50 years old, you'd have seen that the operating profit lifted about 16% there. And that's on the back of all the advancements we're doing, which includes the virtual consultations you talked through.
We're rolling out as a country vaccines slowly, but we have started. People are getting the jabs in their arm. I'm imagining this is a space which you are able to assist, you're able to help. You've certainly got capacity out there. Probably not a profit center for you, but something that you will be able to assist in. Have you been engaging with the health department in this? Is it a space that Afrocentric will be operating in?
Absolutely. So we've been well engaged with the Department of Health. We've been engaging with some of the non-profits as well. We have a nurse network, Simon, in excess of 3,000 registered nurses.
Wow.
Which is capable of countrywide rolling out about 50,000 vaccines a day that we can administer. So we're certainly going to mobilize that the moment we get our hands on those vials. We're going to do that for our membership, obviously. But we've also extended it further and said to government, we're happy to help in the outlying areas, in the rural communities, or in the CBD, to the extent that they may need the support.
We had our national budget 2 weeks ago, Minister Mboweni. What struck me was no mention of the national health insurance, although I imagine he's got bigger challenges right now. I don't think it's gone away. It might just be delayed a bit. Your sense around that? I've seen comments out of Afrocentric that actually you view this potentially as opportunity rather than threat for the group.
Simon, so we actually have one of the most successful public-private partnerships in the healthcare sector. In our pharmaceutical business, we are delivering about in excess of 700,000 antiretroviral drugs per month to state patients. So that gives you an idea of the scale and reach that we have countrywide. Then, in addition to that, we do the administration for PolMed. We do the managed care services for GEMS, all of whom will probably form the backbone of NHI. And hence is a level 1 company. We're saying that we're well positioned to be able to assist government in rolling out NHI.
We'll leave that there. That is Ahmed Bandakar, CEO of Afrocentric. Everyone gets excited about discovery, but here's a little gem. Go along to MoneyWeb and find the article Keith McLachlan wrote maybe 2-3 weeks ago on Afrocentric. I think there's a little gem sitting here. Ahmed, appreciate the early morning time. This show is brought to you by Orbvest's latest investment opportunity, Orbvest Diversified Holdings 4. It's a fund that would invest across a broad spread of proven Orbvest medical buildings. For more information, visit orbvest.com. Orbvest SA is an authorized financial services provider, license number 50483. The question I've got for the poll today, GDP down 7% yesterday, taking us back to about 2014 levels. Now the question is, how long to get the GDP back to December 2019, pre-pandemic? A couple of years, probably about 5 years, worst case, maybe even a decade. You'll find the poll on our Twitter account at MoneyWeb. That's it for today. We're live every weekday morning on the MoneyWeb website and the app, 6:30 a.m. Podcast available from 7 a.m. Massive thanks to my team, Eddie, Kodora, Nicole, and Masechla, to you for listening, my guests for their early morning contributions. My name is Simon Brown. This is MoneyWeb Now. We'll chat again tomorrow.
You've been listening to another MoneyWeb Now podcast, posted every weekday at 7 a.m. on moneyweb.co.za. MoneyWeb Now, on the money.